Welcome to the Rim Break Rodeo. We hope this video helps.
You start by opening a brokerage and funding it. Do this now. Once done, define your goals: income versus growth, time frame, and how much risk you accept per trade as a percentage of your portfolio. Make sure to enable two-factor authentication and link bank transfers. These reduce friction when you act. Then place one practice trade or use a demo to learn order types: market, limit, stop, so you know how execution works under real conditions. You continue by picking a clear strategy: swing, position, or dividend investing. Stick to one while learning. Then research ideas using both fundamentals: earnings, revenue, P/E, and technicals, trend, volume, support, and resistance, to find confluence. Next, plan position size. Decide risk per trade as a percent of your portfolio, compute stop distance in dollars, and convert that to share count. Once your sizing and entries are set, place orders and document rationale so you can review outcomes later. You finish by managing open trades. Set stop losses and profit targets immediately, and consider trailing stops when positions run in your favor. Make sure to review your trades weekly in a journal that records entries, exits, size, and emotion. This is where you learn fastest. If performance deviates and losses exceed your plan, pause trading and reassess your edge, risk model, and execution. Do not double down. One troubleshooting tip: if orders frequently slip, lower position size and adjust order types to control execution.
Thanks for watching. Consider subscribing if we helped you.